You are listening to ChartingWealth.com for Tuesday, the 2nd of June, 2015. We are looking at the two-day chart for IYY. This is the U.S. Total Market Index Fund. You can see that we have drawn a two-day trend line, which is what this blue line is, and you can see where the market ended on the two-day chart. We have a red down candle, a small one, not quite a doji. We had a green, again, cross-looking configuration as far as the candlestick pattern goes, again showing a lot of indecision. The move over these last 2 days is down. It falls within the pattern all the way back on the 26th of May. We had a crossover going down between the 28th and the 1st, and we still have the derivative oscillator in the positive on the two-day chart, but we are in a downtrend on the large chart. Now, when we look, it tells us that we were up today 0.26%. That's just for the day. Now, let's go back to the 4-hour chart, and you can see what the 4-hour chart is showing us. It again is showing a down move this morning, a bit of an up move this afternoon, and a doji at the end of the day. What does that mean? Well, that means a great deal of indecision. You can see there was a crossover going down all the way back in the morning of the 26th of May. We're in a downtrend on the total market, even though it is technically up 0.26%. Okay, that's a quarter of 1%. So now that's where we stand on the total market. Now let's go back to the two-day chart. And let's go to SPY. It is up 0.20%, so not even a quarter of a percent. Looks very similar, as usual, to the IYY. It is crossed over also recently. It is actually in a negative on the derivative oscillator. Crossed over going down between the 28th and the 1st on the 28th of May and the 1st of June on the MACD. Let's go and look back at the 4-hour chart, the half-day chart. And again, it also is showing a bit of a rise, breaking through the two-day trend line, technically, although it is in a downtrend also on the 4-hour chart. So we have the SPY and the IYY, that is the S&P 500 and the total market, are both down on both the 4-hour and the two-day, meaning those are down technically. And now let's go back to the two-day chart and let's look over at the Qs. The Qs is QQQ. We call it the cubes also. It is the NASDAQ 100. It was up today 0.34%. And again, that's about a third of a point up, a third of a percentage point. It is in an up move, technically, crossed over between the 14th and the 18th of May going up. Still in an up pattern. The same divergence as it was 2 days ago. It is an up move today, so the NASDAQ has been in an up move since it's crossed over going up back between the 14th and the 18th. The derivative oscillator is up as well, about the same as it was on the last two-day candle. Now let's revert back and look at the 4-hour chart. 4-hour chart again is showing us a bit of a doji there for the day. It is technically up. It was down the 3 days prior, 2 days prior. Each one of these candles, again, on the 4-hour chart represents a half day, so every 2 is a day. Count back 6 candles. It is going down those time periods. It, again, was up technically today in the morning more than in the afternoon. Still in a negative going down, however, on the MACD, which is what we pay attention to, and on the derivative oscillator. So the Qs is also well, I'm sorry, I take that back. The Qs is in an up on the 2-day chart, a down on the 4-hour chart. So the Qs is technically in one of those patterns where we have the large chart, which is what we go by, is in an up pattern. The down pattern we see on the 4-hour chart, but we go with the large chart. Now we again have some questions whenever our small chart violates our large chart's move. So that is where we stand at the end of the day on the Qs. Technically down on the S&P 500, down on the total market, and up on the Qs, but with the caveat that we're down on our 4-hour chart. So lastly, now let's always do what we do. We look at gold. We have been down on gold since it crossed over going down between the 26th and the 28th. Gold has broken through our 2-day trend line, and it has ended the 2-day period in what we call a doji. That means it moved as much up as it did down. There is just a little line of movement today. What does that mean? Well, that means significant questioning, indecision in the marketplace as to where gold is going. Let's get a better feel for what's up with gold when we look at the 4-hour chart. We can see that the 4-hour chart actually is down for the afternoon, up in the morning. Technically, gold was down 0.09% today. And we can see that gold is in a down move on the short chart, having crossed over going down between the 19th and the 20th. It's also in a down move on the 2-day chart. So gold is technically, both patterns show us down moves. So the only one that is up in the air at this point in any way is the Qs. It is up on the short chart, down on the long chart, but we always call that a down because it is the big chart that leads us. Well, that is where we are going into the second day of this new week and new month. Hope that these patterns are helpful to you. Please continue to track, pay close attention. The nice thing about all the charts that we track is these are very liquid, means you can get in and get out of them quickly and easily. And we look to make money on up moves. And if you are an experienced trader, you know how to make money on down moves. If you don't know that, pay more attention to what we publish on chartingwealth.com. We so appreciate you joining us. We love your comments, questions, observations. Please go to our website, chartingwealth.com. Sign up for our daily newsletter, along with the weekly review and forecast that we published, came out yesterday. You can find that on our Twitter account, on our Facebook page, and of course at the website. God bless you. Great trading. Hope that you have a wonderful week and that you can put this knowledge to use.